types of partnership?
Yes, I'm already on the slide number 4, types of partnership.
For me, it currently shows. I can navigate. All right. For some weird reasons, at least I'm not able to see the content it shows partnership, but it's all black. Okay, people, as long as you are following through, kindly keep me posted. No worries. So, talking about types of partnership, journal we have already seen through. Limited is because the very nature of partnership is so that it has unlimited liability, right? So, in order to safeguard people against that unlimited liability, there is a special provision incorporated, and henceforth, this is called as a limited liability partnership or a simple limited partnership, right? Whereby limited refers to what? The liability, which in journal, unless and otherwise mentioned, partnership by very virtue would mean unlimited liability. Then there are two other versions. One is joint venture, another is a strategic alliance. Now, what happens in both of these joint ventures and strategic alliance? There are two specialized companies that comes together and make a third entity, right? For example, in case of joint venture, you have Maruti Suzuki as a classical example, whereby Maruti is one of the companies, Suzuki is a Japanese one. They come together and make Maruti Suzuki as a new company, right? The idea is to rule out the risk. Whereas in case of strategic alliance, again, two people come together, two companies, right? Another example that I can quote for the strategic alliance is, which is a special project between Vodafone is a leading telecom provider, network operator, and you have commercial bank ICICI. So ICICI has a core banking, right? That's the bandwidth that it has, wherein Vodafone can bank upon the network operability. So everybody brings on their best strength and get a M-Pesa as one of the strategic alliance outcomes. So M-Pesa is, at least in Kenya, this is a very popular mobile wallet, right? So that is where both have come together, played on their strength, and made a new product or a service offering. But you may dispute here the what is the difference between joint venture and strategic alliance, because to me as a layman understanding is like there are two companies which came together and created a new one, right? There are two point of differences between joint venture and strategic alliance. One, the joint venture creates a new entity which is separate legal entity. So the moment you say Maruti Suzuki, this itself is a legally registered company, right? That's a point number one. Wherein in case of strategic alliance, M-Pesa is a product or a special offering by collaboration between the two, Vodafone and ICICI. By very virtue, M-Pesa is not a third party company, right? It's not a separate legal entity. That's one distinction. Another is joint venture. The purpose for the joint venture is to rule out the risk. Risk mitigation is an interest of the parties who come together in joint venture, where in strategic alliance, the idea is to play on the strength. The synergy or the team spirit is the idea. So 1 plus 1 is more than 2 is a concept of strategy, and the team spirit and synergy. So that's what is being played when you have a strategic alliance. So these are the four basic kinds of partnerships that we have. Going further, let's look quickly on the next slide, please. Advantages and disadvantages. Now, when you talk about advantages and disadvantages, of course, when you have people with you, right? So what happens when you have two people? Of course, you can share the responsibility, and of course, you can have a better decision making, isn't it? Your perspective is limited by the strengths and abilities that you have. So when you have somebody else as well, you can figure in those perspectives, right? And that's where when Barack Obama was elected as a US president, he was asked what is he reading currently, and he told that Team of Rivals. Team of Rivals happens to be autobiography of Abraham Lincoln, and that, as the name says, Team of Rivals. In his cabinet, he would always have people who would oppose to his views. The reason being that's something very unfamiliar, isn't it? We often find people saying, nodding yes to everything that somebody influential says. Like for me as an instructor, if I tomorrow say something, how am I teaching? Most often people will stumble upon and say, oh, it's good, even if you like it or not, because that's a common human tendency. You don't want to offend, because it might have a serious repercussion in terms of evaluations and whatnot. Well, in that, going by that journal psychology, team of rivals characteristically stood out, and it rather said that when people have diverse opinions, you get to know multiple perspectives. Otherwise, as a king, as a ruler, as a president, if I say something and everybody says not yes, maybe I end up being disastrous. Some of the very disastrous decisions might be taken in that spirit. So that is why shared decision making is advantageous. The next one, it's easier to raise capital. Look it from the point of view that you are organizing tech ideate or Roniros and you are trying to rope in the funding, right? The more number of people that you have in your funding team, of course, you can reach out to those many investors, and henceforth your probability of raising the money gets multiplied by the number of partners that you have. So by that logic, it's easier to raise capital. Fewer government regulation, we are talking vis-a-vis corporation, which is most highly regulated. So compared to sole proprietorship, it's slightly regulated, but compared to corporation, it's still less regulated. So as you move from sole proprietorship through partnership to corporation, the governmental regulation increases in strength. Right? So sole proprietor happens to be least regulated, wherein corporation happens to be the most regulated ones. Business losses are shared by the partners. Of course, that's an interesting one. You can share the losses. That's good to have the friends, no? You can always bank upon and have a buffer. However, its share of disadvantages says that partnerships may lead to disagreements. Of course, that's where it's a common business example. There are two of them that I'll share. When it's about you to decide onto something, right? You can decide. Let it be a simple decision of, say, going and watching a movie. So all you need to decide is like which show, which movie, which genre, where you want to go. But the moment you have like friends, the group decision making creates a problem, right? So that is where it is. Just a moment. Just a moment. Okay. So this is where partnerships may lead to disagreements, and you might not have a consensus, right? Watch one of the English classical movies, which is Young Angry Men, 12 Angry Men. So that's a classical one that talks about group decision making behavior. That when you have multiple people around, how decision making is hampered. So that is where it can lead to disagreement. Also, what we have is in terms of Cyrus Mistry in Tata Empire. Who would not know the ugly spat between Tata's and the Cyrus Mistry, where he exited the business empire? The reason what was said was that Tata's hired Cyrus Mistry at the top-notch position because he was one of the major family stakeholders. And henceforth, by very courtesy, he was given a position as the CEO of the company. Well, what happened next was since Cyrus Mistry has never handled a position, who just a moment. I'll have to see. Am I audible?
Yes, ma'am,
Well,
you're audible. Yes, ma'am. Hello.
all right. So in that, yeah, yeah, girl.
Yes, ma'am. Yes.
So we were talking about Tata's and Cyrus Mistry. So in that case, Cyrus Mistry was given a position because he was a major shareholding in the family in the Tata Empire. But the reality happens on a professional front. He has never handled such a diversified portfolio. And that is where it was mistaken, and Tata's had too much of interference in the work that Cyrus Mistry was doing. And that's one of the allegations that Cyrus Mistry had put up in the open platform, public platform, saying that why he exited, what was the problem when he worked at the Tata Empire. So this is where partnerships can be challenging in the same way. You can have an interference when it comes to decision making, whereby in sole proprietorship you have all the rights, right, as a owner and the decision maker. The second thing that I can quote is like Apple and the Steve Jobs. The very company that the Apple Steve Jobs founded, that very company, then reigning CEO of the company, he sacked Steve Jobs. It's a different story that he was reinstated in the company back. But then there was a very famous time when he was sacked in the same company. That's one thing that how partnership can end brutally. So that was disagree. Or some people not willing to share responsibilities. Very true. I'm sure this is something that you would have also experienced through in case of your group assignments and projects. I know there are certain people who are free riders because it's anyways going to be right a group assignment. Everybody be evaluated like say out of 10, everybody would get 7. It's not a differentiation that you would have in marks. So going by that logic, there are certain people who put in the hard work and there are several who let it. So this is another thing that can happen. The people might be free riders when you have in partnership. And henceforth be doubly sure that you can bank upon this person and be very sure that he would be trustworthy. And henceforth, the next being generally liable is another thing that people are scared of because when you talk about as per law, in law being ignorant, you cannot claim innocence on the basis of being ignorant. If you are not aware, you should have been. That's the only thing possible. So somebody is acting on your behalf, so it is presumed that your partner acted on your behalf. It had your implied consent, right? And it's very difficult to prove that you had no understanding of it or whatsoever. So that's where it becomes another challenge that people might fear putting into partnership. And the last one, the most important one that we have already discussed, is one of the features. The very peculiar feature of partnership says that you have unlimited liability. The next type that you have, can we move on to next? Corporation. So the next type of the business firm that you have is governed by the state laws or the SEBI governing laws, right? That's a corporate mechanism. And the another characteristic feature which we would have talked in the opening session is about Solomon versus Solomon case, whereby a business is a separate legal entity, very much separate, like Garv himself and his company, if he registers as corporation, Garv Limited or Garv Private Limited, they both are entirely separate. So Garv Private Limited as a corporation, registered corporation, need to conduct itself accordingly. And the Garv himself as an owner has a different role to play. However, there are two types of corporations. One is C, you can remember with the common type. C as a common type of corporation, whereby, as a general rule, you can be sued for actions of your partner and even the debts of the company. Another is a sole proprietorship kind of corporation. Why sole proprietorship kind of? Like the taxation provision in sole proprietorship is what? Sole proprietor files tax in the personal capacity. In the same way as corporation, even if it is registered as corporation, but S is a special provision of corporation, whereby the taxation provision is very similar to sole proprietor. So, to the extent of investment of the share, you will file the income tax return. Quick look at the advantages and disadvantages on the next. You can raise money by issuing of the shares. That's the characteristic, right? That's where people invest in the share market. That's where companies are listed on stock markets, isn't it? So that's where they can raise money. And that's what one of the things that we talked through when we talked about Falguni Nayar and Nykaa. It is releasing its IPO. And that's one of the things that we even talked through. People who follow Elon Musk or who have invested into Tesla had huge capital gains and wealth appropriation. Right? So you can raise money, and that's in finance known as a dividend policy, a concept whereby you can ask people to buy shares and henceforth being owners in the company. And you raise that money and you can use that to expand your business portfolio or your business market operation. That's the first advantage. Then you can look at the another ones like the limited liability. The most bankable thing why people go for such a highly regulated form of ownership is because it offers you limited liability. That means in case of bankruptcy, in case of any other debts, you're only supposed to pay 2% of investment gains in the shares. That's beyond that. You have personal property, you have entire fleet of cars, you have massive bungalow, penthouses, whatnot. Everything else is free, right? So that's the best advantage. The business term that we use to denote this kind of feature is what we call as a limited liability. You might be asked to write a short note or a two-liner answer on what is limited liability, what is unlimited liability. So please have an understanding. When you buy shares, who are the owners of the company? This is my
Ma'am,
question to you.
you are the partial owner
Sorry.
of the company if you buy. Like yourself are the partial owner of a company if you buy shares, right?
Absolutely. Absolutely. I'll add on to little, rather I'll modify and remove partial because shareholders, right? Shareholders are actually the owners of the business. They are the only ones. Rest everyone from CEO to everyone else, board of governors, directors are the custodians of shareholders' valued money, running ensure that they are acting in the best interest of shareholders. Henceforth, the actual owners of the business are always, in business terms, the shareholders. It's their money that they have invested into, and they have hired CEO and everybody else to take care of that money. So rest everybody only happens to be custodian of shareholders' money, right? So actual owners are shareholders. So going by that logic, we say that the moment you buy shares, right? The Gulf said that okay, you invest into share and you become owner. So today you invest into Tesla and you own 5% shares Tesla. That's where you are 5%, right? You are all computer engineers. In case you happen, companies, IT giants like Accenture, IBM, and few others, employee stock option plans is one of the HR ways of motivating people, that you get a discounted shareholding pattern in a company that builds your motivation and more of a commitment that this is your company because you own up to 5%, 2%, 3%. So in case the company grows, your money grows, right? So that's the same logic. You can be an owner if you buy the shares. If you withdraw and sell it off and liquidate, well, you can exit the ownership. The another one, you can hire professionals. So you can have expert advice. Look at the sole proprietorship. You are a one-man show, limited by your own strengths and abilities. Look at partnership. You have at the best two and few others, but still you don't have an entire, expert opinion. The entire boardroom with experts, the best of the top-notch people in their own specific domain. So that is where businesses can be managed very professionally. That's another advantage that you can bank upon when you're thinking of corporation. Its share of disadvantages, all these are interrelated because this is highly regulated, right? So, of course, you would need legal assistance. You would need services of chartered accountants, company secretaries, board of directors, board of governors, independent directors, and whatnot. So, that legal assistance is needed. You might have an understanding of it, that's all right, but then to what an extent? There are too many statutes to be followed through, and that's why you need legal assistance. Since you need legal assistance, since there are a lot of formalities, there are a lot of regulations, mandatory requirements that you need to fill through. That's why it becomes usually costly to set up because there are various fees associated, various other costs involved. For example, you are supposed to organize, say, 5 meetings, right? And you have to put up those meetings, send invites to people, sponsor their arrangements, and then again put those meeting minutes in the public domain. These are by very statute, by very rule, right? So henceforth, they require a lot of cost. Again, they are subject to governmental regulation. So whatever a rule comes up, you need to follow through. Like opening of the campus, we are governed by UGC or the Rajasthan state government. So it has to be looked into what are the government protocols they are supposed to follow. A lot of paperwork because again, how would you prove that you maintain the ratio of independencies to independent directors in the board of the governors? You need to ensure, if you study through corporate governance, that specifically talks about the constitution of board of directors, who could be the people in board of directors or board of governors, who can be nominated as a CEO, who can be independent director. So going by that, a lot of paperwork needed, and that's one of the reasons you can find, any of the company annual reports in a public domain. So that's one of the things. Income is taxed twice. Now this is something interesting. Can somebody in the class let me know how is it, on what basis are we saying that income is taxed twice? Anybody who invests into share or have seen their elder siblings, cousins, or parents investing into, or has an idea how share market works? What do you earn out of it?
Ma'am, taxing twice would mean first the company is taxed on the basis of the profit they make, and when you cash in your shares, you have to pay you have to pay tax again.
Second part, I'm sorry, I missed. First one was clear. Can you please repeat?
Second one is when we cash in our shares or stocks, we have to pay the government tax on the money we personally made.
Oh, all right, absolutely. Can you please name yourself? You didn't seem to be girl. I'm
Mm.
sorry.
Pardon me, ma'am.
Can you please name yourself so that I
Satyankar, ma'am.
address you by name? All right.
Satyankar. Yes.
Absolutely. Absolutely, Satyankar. Thank you. Fantastically done. Satyankar has already made our at least my part of explanation easier. And you absolutely nailed it. So first of all, the profit that the company has made, company pays profit tax on that money. Right? So like if you look at profit and loss account, you would get to see there is a profit and profit after tax, we call it PAT. Right? So there is an amount of X amount of money that the company has made and company pays a tax on it. This is a first tax that's paid on amount earned. Secondly, since you are a shareholder, what do you get as an earning? You get a dividend, right? The technical term of earnings on share is what we call as dividend. So since the company has made a profit, that profit, because money originally belongs to shareholders, so shareholders have to be rewarded. How shareholders are rewarded? They are being paid dividends on the shares that they have invested into. Now, when I'm filing my individual income tax, I'm an employee, I'm anybody XYZ who has invested into shares. So shares dividend becomes an extra income, right? And I need to mention that in my income tax declaration, that this is an extra income incurred and henceforth I have to be taxed on this. Since it's the same amount of money that is taxed, one at the corporation level, second at the individual level because of dividends, this is called as double taxation. So the idea is basically devaluation of money. It's same amount of money that's being taxed twice, and henceforth the double taxation as one of the disadvantage. Like company doesn't actually pay double taxes, but then the same money gets devalued, and that content is listed as a disadvantage. The most popular form, the next one, please, franchisee. When you talk about franchisee, we have all seen it, right? Whether you might have hopped through Subway or stepped into Domino's or drive through of McD's. When you talk about franchisee, it's already an established brand and you take a commission to sell off a product and services under the same franchisee. Advantage what we see such popularity of it, and some other loopholes here. Right? So everybody knows what Domino's is, what Subway is, or what CCD is, or Baskin Robbins is. All these are franchisee models, isn't it? So established product or services of franchisors can give you a technical expert advice. That's where one of the things you can be very much sure of, right? The moment you try Baskin Robbins blackcurrant anywhere, with the same consistency, same flavor, or even for the Pizza Hut or the Domino's, isn't the consistency the same? Because they ensure that you use the same kind of dough. For example, Domino's used some special kind of dough for making the pizza bases, and it's same everywhere. And henceforth the process protocols, henceforth the same crunchiness that you have for KFC, right? So that is where you can have an expert opinion, not only in terms of process protocols, but in various other terms how to manage your company well. You can have an expert opinion coming from franchisers. Equipments and supplies may be less expensive because they need to ensure. So for CCD or barista or Starbucks, you may have coffee vendor, right? That may be installed from the franchisor because you need to ensure certain processes, you need to follow certain quality checks and principles. So that might be one of the other advantage. Guaranteed consistency of result. People who go to Starbucks doesn't need an understanding why they are going it, because the company Starbucks itself have heavily invested into creating that kind of brand valuation and awareness, right? So you can be rest assured that you'll have a consistency of results, and that's one of the things why people go for usually the most popular businesses to opt out as the franchise model. Share of disadvantages, the more famous the brand, the costlier it is, isn't it? So by the same logic, since franchisor and the franchisee has a contract between them for an amount of money, that amount of money or the valuation is too high in case the brand is too popular. So your startup capital costs go right. The secondly, uh, then when you make a decision, you might feel, look at from the point of view of sole proprietor, you might see a lot of interference coming from franchisors in terms of making decisions and protocols. So supposedly you visited any of the Domino's outlets and you didn't had a good quality, right? You didn't had a good experience of product, service, or quality. Who gets impacted? Of course, franchisor loses the business, but more critically, what is it at the stake? It's the brand at stake, right? And hence, for too much of interference at times creates a problem. And that's one of the things, even when you are looking for venture capitalist support, that's a dilution of ownership, right? Nothing comes free in life. So that's another reason. The performance of the other franchisee, like a franchisor, you may have hundreds and thousands of Domino's outlets. So how one is doing and how one is not doing, so a franchisor may cancel, your deal in case he or she is not happy with the kind of results that you have put up. So that would have an important bearing upon how you are doing your business. And the last one is like the franchisor. It's a folktale that we have all grown up with, David versus Goliath, right? So Goliath happens to be very, very powerful one. That's exactly kind of our relationship between franchisor and franchisee, SEE, right? So franchisor has a more power sharing in the relationship or the contract, and by that virtue, he has a upper say when it comes to decision making, and he has an upper say when it comes to dismissing the agreement, right? So that is the another disadvantage. So it's an unequal distribution of power between the two that happens through. Is it clear so far?
Yes, ma'am, it is clear.
All right, thank you. Going forward, there are certain things that we have already discussed through. I'll only stop where it needs some more of a deliberation, like defining organizational structure, what it is. This is already we have talked in bits and pieces when we talked about organizing. Let's revisit. So when you look at the definition of organizational structure, this says this is a formal arrangement of jobs organization. In a company, how the jobs are arranged, that is what is structure. Now, when you are trying to design an organization, these are the 6 bullet points that you would need to, or the check boxes that will help you how to write a particular organization structure. And henceforth, the designing too. Work specialization, departmentalization, chain of command, control, centralization, formalization. These are some of the things that we have already talked through when we talked about principles of organizing, and at the second time when we talked about Henry Fayol's 14 principles. If you still feel like, please let me know, else I'm moving forward. Anybody needs explanation on what are the organizational design elements?
No, ma'am, they are clear. Like, they are self-explanatory.
All right, thank you. That saves a lot of energy and time.
Yes.
Good. So work specialization, like you computer science engineer and me management graduate. So again, the same thing. Departmentalization by type is what we'll spend some time on. Functional ones, when your jobs are grouped by functions. So this is atypical of any organization where you have marketing, finance, HR, operations, right? So that is by functions. By product is product line. Let me look at the slide. Quickly navigate through like functional departmentalization. If you look at the slide, you have manager, engineering, accounting, manufacturing, human relations. Like in your university, if you go by functional departmentalization, you can have AMS, you can have and you can have your own department, you can have your laboratory in charge. So these are nothing in the function departmentalization. What is the best advantage that you have? Somebody specialized is doing something, right? So you can bank upon that. The disadvantage, however, happens to be Poor communication because you think, okay, my computer science and my subjects, languages, algorithms, and so forth. Okay, for me, like management, it's like more of marketing, IT, operations, finance, HR. So that's where you have to narrow a focus. You are overtly focused on your functional areas, and henceforth it may result into poor communication. And secondly, the limited view of the organization because you are more concerned about your own departmental goals. Like other subjects of your engineering makes more of a sense to you. For me, for this subject, O&M is like odd one out, isn't it? So that is where people have a too myopic view of the organization. They're too concerned about short-term view of their own department and lack the bird's eye view and appreciation of overarching goal of the entire organization. So that's a disadvantage. Why I explain it this much because in any kind of departmentalization, coordination becomes a challenge. Duplication of effort remains a similar disadvantage, and myopic view that too concerned about their own departments and lose the entire organizational overarching view remains by default settings common drawbacks, right? So let's look at the second one, geographical departmentalization. This is something I'm sure you would have heard of the moment I said Delhi Metro and I said yellow line, violet line, green line. Or you look at the Saras or Mother Dairy, they all follow the same geographic location. What is the best advantage that you have is like if you look into India, top north to bottom south, there is entirely a huge difference in the way that the people coordinate, organize themselves, conduct themselves, right, in their daily routines, in their own affairs and everything. So when you're closer to a geography, it's easier to cater to that peculiarity of geographical location. That's the best advantage that you can have into. Right? The disadvantage again, North would also have the same league of functions as the South, as East, as West. So it's four times multiplied, right? If you have more number of zones, again the same functions duplicated. Isolated because you are way too far flung. Every corner and territory doesn't have much of an interaction. Coordination could be a problem, and isolation is a problem. Next one, the product one. Anybody knows what is Bombardier or have heard of Bombardier? Mm-hmm. People?
No, ma'am, never heard of it. Like, is it a company?
Okay.
An airplane company, I guess.
Yes. Which company?
An aeroplane.
Okay, aeroplane. All right. Good trial. It might be. I have a limited understanding of it, so I'll look at it from the perspective of point that I'm trying to drive in. Any one of you traveled from Delhi Metro? I'm sure at least delights and swear with the Delhi Metro
Yes, ma'am, many times.
many times. Good one. So next time, be very keen observant when you are waiting for at a platform for your metro to come up. The right engine reads Bombardier. That's written bold, right? That's the only where it is written, nowhere else. Because Bombardier is a Canadian company into heavy equipments. Maybe deals into aeroplanes as well, somebody said. So maybe jet engines, which are heavy duty equipments, and the machineries and tools. So that is where it comes from, and we have borrowed in that expertise when we built in the Delhi Metro, and henceforth the Bombardier remains. So the slide here talks about an example of product special departmentalization, and henceforth Bombardier. Since it's an international edition that we are referring to, and henceforth Bombardier as an international example, you can pick up if that's difficult to remember. You can pick up for the Tata metros as well, right? So, for example, Tata deals into mass utility when you have Tata Motors. Tata deals into the heavy equipment machinery. Tata deals into what do you call it? Heavy heavy vehicles, heavy utility vehicles like you have Tata truck. It deals into the medium utility ones like you have Tata Ace, which small retailers and wholesalers use it. It's also into a retail car segment, right? Which is whereby you have car models like Tata Tigor, right? So that's exactly as per the product. So you have mass transit vehicles, you have heavy duty vehicles, you have lighter ones, you have retail ones. If your organization is arranged along those products, this is what is called as product departmentalization. The best advantage is uh, you can cater to your customers the best because what do customers buy? Products or services, right? So and each one is specialized product offering that you have, henceforth better catering to the customers. However, duplication remains invariably the same and a limited view, because Tigor people would say my agenda is to get the Tigor best. Tata Motors will say that my agenda is to get the best deal for Tata Motors, and hence the entire organizational overview is lost. The second last one, process departmentalization, when you have it as per the process. I'm sure you'll be able to recall when I talk about passport office, right? That's exactly a process protocol that we follow. So there is a form submission, there is a queue, there is authentication, there is a token submission, then there is form submission, and you have your biometric done, right? Credentials verified and token issued, and after exactly. The one that you can look on the slide is a process departmentalization for a furniture company, something like a home store that we have, Home Depot, right? That's into home furnishing and upholstery. So if you buy a piece of furniture from there, this is a typical process departmentalization that at the back end it would have followed. Drawing department, planning department, assembling, lacquering and sanding, which is polishing, right? That polishing one, finishing department and inspection, somebody is certified saying, okay, finally dispatched to Home Depot, and henceforth people could take. Right. So this is where what you can have a best is efficient flow of activities. What you can have a disadvantage, not applicable for all. It is highly contingent upon the type of business service that you would read. And the last one for me to discuss today is a customer. Customer is the king is something that we have all heard with, isn't it? And that's where customer departmentalization comes into. There are two typical examples that you can look. One on the slide, depend banking follows this. Banking has special people to handle NRI accounts, current accounts, savings accounts, fixed deposit, credit cards. So according to a customer, who is an NRI customer, who is a privileged customer, who is a business client. So that is one of the things. According to the customer, you have divided it. Insurance is another example that fits into, right? So in case of insurance, you have like MUJ has a third party insurance provider. So that's an institutional sale of XYZ insurance to MUJ. You get so many employees, right? Then the retail, I in my personal capacity have bought LIC. You might have bought HDFC. Somebody else might have bought a Aviva Sun Life insurance. So this is a retail kind of business. So you have retail customers to handle. Somebody might have a tie-up with a government institution. So that's a government institutional tie-up. So according to customer, you have done it, right? So that is where NRI needs may be very different from a current account holders. And current account holders need might be very different from savings one, isn't it? So current account can withdraw, certain amount of money based on the transaction credibility, even if there is no money in the account. We call this as an overdraft. It's not possible for me as a savings account person, right? So since each customer has a different kind of requirement, and henceforth that fits in the better export. However, disadvantage remains invariably the same. That's where we end today. I'll see you henceforth in the next class, continuing the rest of the organization structures. Some are very basic ones, which we have already seen through. But yes, last few slides, 3, 4 of them, yes, that needs a deliberation that we'll pick up in the next class. All right? Yes, no?
Yes, ma'am.
All right. Please stop the recording, and thank you so much for such a patient listening. We are done.